Welcome to the Straight Path Podcast. I'm Dan Cook, certified financial planner at Straight Path Wealth Management. Today, I'm joined by tax expert Rhiannon Diekema. Rhiannon, thanks for being on the podcast.
Thank you for having me.
Are you excited to be here?
Oh, I'm pumped.
You're pumped?
I've been looking forward to it all week.
Good. I have too.
That's fantastic.
You said you're going to laugh on the podcast. We talked about this right before we started filming.
We did.
Over, under on you laughing at least 3 times.
Probably
one.
Probably over.
Over?
Yep. So when I was in high school, which was about 20 years ago, they took me off camera because I wouldn't stop laughing. But at that time, I knew I probably wouldn't be a local news anchor. So I scratched that off my career options.
Can I ask what you were filming for in high school?
I don't remember. It was a long time ago.
Okay.
I think it was for some history class, but I don't remember exactly what we were filming for.
All right. Well, today we're going to be talking about taxes. It is
Beautiful.
Tax season. We're jumping in there. You're busy.
Yes.
We have the boards on Monday morning, and yours was quite a bit higher on the amount of returns you're doing than everyone else.
Yep.
How are you feeling about it so far?
Pretty good. Pretty stressed. We're in the beginning though, so I'm not too worried. We got a couple months left, so it should iron itself out eventually.
Yeah. How long have you been doing taxes?
Since I can remember. I started with my grandma doing them by hand, probably when I was 14 years old.
Wow.
Yeah. So she taught me how to do just a simple 1040 when I started my first job, and I've been doing them ever since.
So what's your career path look like? Have you been at Straight Path the whole time or before that?
So before so I started at Straight Path January of 2019. And prior to that, I was a sales and customer service manager for a sauna manufacturer.
Okay. Big jump there.
Big jump. A little different of a switch of careers, but that's what I went to school for. So I wanted to utilize my degree.
Awesome. Well, let's talk more on the tax side of things. Taxes are important, part of everyone's life, right?
Yeah.
Some people could file and maybe get a refund. Some people might owe and probably a little bit less of fun on that side of things.
Yeah.
But jumping into it, is it better to file as soon as possible or is it better to wait? Because there's theories on both, right? If you file ASAP, get your documents gathered and everything, there's better that you can have more accuracy going forward and just be prepared for it. You can also amend your tax return if something comes in later. On the flip side of that, it's better to be precise than fast. Do you have any input on that? On if some people should wait until everything comes in? Obviously, you want all your documents, or is it better to do it as soon as you get everything you have and just go for it?
So I think it's on an individual basis, so case by case. If you've been doing taxes on your own for, we'll just say 10 years, you know exactly what you have coming. I think you have them, you're good, file. It's pretty easy simple to amend if you do get something corrected later on. However, if you know that you do sometimes have those corrected documents or you may or may not have something you're waiting on, I would recommend just holding off. I mean, there's no rush to get them done, but for our sake as a prepare, obviously there is an influx end of February, middle of March. So it is nice to kind of trickle some in the beginning if possible.
Okay. Well, we all know the deadline, April 15th. It's tax day. It's also my mom's birthday. Happy birthday, Mom, out there if you're watching. I'm sure you watch all of them. But what are some other deadlines that people should know about when they're filing? March 15th is the partnership and S Corp deadline. There's obviously extinctions and everything like that. But what else should they know about from a deadline perspective?
So I think any partnership S Corps are the March 15th, like you mentioned. And the purpose of that is to get those K1s out to the owners so they can file by April 15th. So if you needed to extend the partnership or the S Corp return, you would need to do so prior to March 15th, obviously. Aside from that, April 15th is the deadline. That's when first quarter estimates are due as well. So we just like to make sure we have everyone in our system and prepared for that deadline if possible.
Awesome. I'm going to break it up a little bit. Taxes can be dry.
Okay.
So we're going to go to something a little more fun here.
Okay.
Matt was pushing for this.
Okay.
He wanted fact or fiction. I'm going to call it fact or false.
Okay.
If you watch The Office, that's a better reference from a false perspective. But let's just go into it. So I'm going to ask you these questions, and you're going to say it's either a fact or it's false.
Okay.
And then we're going to ask a little bit further details if you know why, why behind the question. The IRS began during the Civil War. Fact or false?
Fact.
That is correct. Do you know why?
No.
Okay. The reason why is the U.S. government needed more money to cover Civil War expenses. So they started the IRS.
Yeah.
All right, number 2, you're 1 for 1 right now. The tax code, including U.S. tax regulations, is less than 10,000 pages.
Not a chance.
Not a chance. Do you
No.
know how many?
Let's say 95,000.
Kind of close, a little bit off. It's a little bit less than that. It's over 70,000.
Okay.
So less than 10,000 with just the federal tax code. So
Yeah.
those U.S. tax regulations add to it quite a
For
bit.
sure.
All right, number 3. You're 2 for 2 right now. You think you're going to go get them all right?
Oh, let's do it.
All right. The top 5%, about 7.6 million returns of income earners paid for the majority of income taxes in the U.S. Fact or false?
Fact.
It is a fact. You know how many? How much percentage of total income taxes were paid by that 5%?
75.
Close again. It was 61%.
Ah.
61. Top 10% account for 72% of all taxes paid, and the top 50% account for 97%.
Wow.
So quite a bit there. Yeah.
Yeah, sure is.
What are we on? 4. Number 4. So you're 3
Okay.
for 3. We are at the highest income tax rates in the history of the U.S. Fact or false?
Fact.
False.
Ah.
Do you know what it is by chance, or do you have a guess?
No.
Okay, so it was in 1944, 94% untaxable income over $200,000.
Ah.
There's quite a bit, but that inflated for today is about if you're making an income of 2.5 million.
Yeah,
So
that makes sense.
it's a lot of money. This might be a pretty obvious one, but we'll see. Maybe I'm throwing you off on it. Canadian cereal companies receive a tax break for putting a toy inside the box.
Fact.
That is a fact, yeah.
Mhm.
If I made that up, you'd probably be questioning how I made that up. But last one here, you're basically golden. I think you missed one on there, but your
sure did.
chances of being audited by the IRS are about 5%.
False.
That is correct. Do you know how much? What the percentage is?
I believe it's under 1%.
It is. It's about 0.5%.
Okay.
And now the IRS is watching out, and they're going to audit everything we do. So
Yeah, right.
we're good. We're good. But is there anything you can think of that people shouldn't do? I think a lot of times when we look out there, obviously don't lie on the tax return. They're going to catch that whenever they do that. Provide all the documents you need. But in your mind, top of head, is there anything that you can think of just as a note when someone is filing, if they're doing their own taxes or if they're bringing taxes to us?
To not do?
Mm-hmm.
Not that I can think of off the top of my head. I guess more specifically, I do a lot of business tax returns. So I guess organization is key there. And I guess commingling anything personal and business is a big no-no. If you're able to kind of split that out before providing me with that documentation, that's super helpful. So then all we have is the business income expenses, so we can calculate the tax return based on those figures. But as far as not to do, I can't think of anything.
Other than not lying.
Well, of course. Yeah, exactly. Being truthful is important. So that's why we do have those due diligence questions.
I think that brings us to the next thing I want to talk about is the big box, big brand, doing taxes on your own or maybe bringing it to one of the big box tax dealers. We're not going to name any names here, compared to bringing it to us to do. What does the difference in the process look like? How do they benefit from it? Obviously, this was mentioned on a couple of different podcasts regarding the financial planning side of things, but we're much more proactive rather than reactive. We can still be reactive, but it's good to kind of know your tax situation, go through, do your actual taxes, and see how each year we can make it the most efficient for people. But what does the process look like from a different standpoint, and how does that benefit people?
So you hit the nail on the head, right? So we're very proactive. So we're proactive pre-tax season, we're proactive during tax season, and we're also proactive after. So we do a lot of tax plannings with our clients, business owners or just individual clients that we have at Straight Path. And throughout that year, if there are any income changes, retirement, major life changes that would affect their tax situation, we know that. And we have that in our software. So if they need to make an estimated tax payment because they, got a payout or something that would affect their tax situation, we're going to know about it and we're going to be proactive about it so they don't get that surprise tax bill on April 15th. But I think so in regards to the differences with, the big box, as you mentioned, I mean, you typically go face to face, have your tax meeting, get your taxes done, and that's it. I mean, there's no tax planning involved. There's no follow up. There isn't, they basically shut their doors down after tax season.
They take
for
what
the
you
most
give
part.
them and they
And
file.
right. Instead of being a little bit more proactive so there are not as many surprises, I think is, part of our goal here at Straight Path and that client experience component.
When clients are looking to get all their documents gathered for the tax season, what are some of the most important things that they should look out for?
Anything that has, the tax year on it. So 2024 W-2, 1099, dividend, interest, income, K-1s, anything that says, usually, when you get something in the mail, it says tax document enclosed, tuck it away, bring it to us. We'll take care of it.
Okay. And back to the deadline thing, some of those documents aren't even out yet, right?
That's correct.
Yeah.
Yeah. Some of them come out February. So be on the lookout still if you don't have any, or if you're missing something. But yeah, for the most part, all W-2s and 1099s should be out aside from the retirement statements and stuff.
And companies can still correct 1099s right now. So that's probably
correct.
one of the bigger things to watch out for.
Mm-hmm.
So if you do have a 1099 out there, and you're looking to file, just be aware that companies can still correct through that deadline time frame there. I think the end of February might be where that might be up. But
yep.
Even further, I think there might be some special situations where that could go into March. So
yeah.
A couple more things I want to talk to about here.
Okay.
The big thing that I want to point out, and we're not going to jump too far into this, but just the changes that happen year to year on taxes. Obviously, the numbers change, contributions, deductions, things like that. Those are the biggest ones. But the thing this year in specific is the Tax Cut and Jobs Act. The deadline for that to expire is at the end of this year.
Mm-hmm.
It was put into place by the Trump administration. Trump's back in office. So more than likely it's going to be extended, but we don't know what's going to happen as far as some of the other specifics. And the two big things that stand out to me from a corporate standpoint, he's talking about lower the taxes on that tax rate to 15%. From an individual standpoint, it's the SALT cap.
Mm-hmm.
So what is the current SALT cap? How does that affect people? And if that goes away, I mean, that can be huge.
Mm-hmm. Yep. So the current SALT cap is 10,000. And I think what the administration is looking to do is doubling it or just completely taking it away, right? So it allows you to take more of your state and local taxes on your tax return instead of being capped at the 10,000. So you could take 20, you could take 15, whatever the increase is, whatever it changes to, if it even does, could be a huge advantage to those who do pay those higher taxes in those higher state tax rates.
That's all I have for today. We're just getting started on the tax season, so we can laugh a little more. I think I had you at maybe one or two. I wasn't keeping too far track.
Yeah.
I think you were on the under. So
I think so too. Over the last 20 years, maybe I've matured a little bit.
Maybe. There's 3. All right. That's all we have for today. Thank you for watching. And remember, when you plan better, you invest better, you get to live better. See you next time on the Straight Path Podcast.